following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have Bill Meridian of Cycles Research on at the half hour. On Wednesday, we're going to have Grace Morris of Astroeconomics on. She's a very experienced astrologer who's going to talk to us about IPOs and how she uses the birth charts of these to determine which ones will be more successful than others, which I think will be an interesting show. The first chart that I posted in here today is actually a cartoon that they're using in Britain. It's a fear tactic, of course, as you can see, the British ship going the opposite direction than the water. And with Merkel on top, and they're basically saying abandon ship in the European Union, and they're using all kinds of fear tactics. The Prime Minister came on today from the UK and said that the pensions would be in danger, if they leave the EU. And it may or may not be true, but we've heard this before, been there, done that. So you got to pay attention to, what the charts are telling you, I guess, because you can certainly tell when the politician is lying because his lips are moving. I shouldn't get into politics. I get more trouble than that. And so let's get on with it to what the markets are doing. This is a big week, folks. And the reason for that is that we are at the same cycle point that we were in 1981 with these interest rates. I wanted to share with you the chart of the what interest rates are doing around the world. And as you can see, we're one of the few countries that still has a positive interest rate. New Zealand actually has a positive interest rate on the 1 year, but almost everybody else, as you can see, even Spain, which is, the Spain and Italy, Iceland, all those things. I mean, that's just amazing that they have such lower rates than we have with ours. But there must be a reason for it. Prices are there for a reason. And I guess this is the reason now that we could go, maybe we're going to go negative here. I guess that's certainly a possibility. But boy, we've got some patterns out there that would be enough to, to scare the bejeebies off of anybody if you're a pattern recognition person. The first one that I'll share with you is the long-term weekly in the Treasury bonds, and there's some. I'm going to share you some that go back 30-some years, but this is a long-term weekly in bonds, and right now we're back up at this 168 level and change. 169.12 is the exact 61%, 1.618 expansion of that move. So we would certainly want to be watching that. But I wanted to show you just the longer-term chart that we get this from our good friend Jim Bartolione, who is going to be moving near me in Arizona, but he's going to be in San Diego. Smart little dude. Anyway, you'll see this is a 30-year bond, the continuous contract. As you can see, when we bottomed in August of 81, if you'll notice that secondary bottom that is higher, that actually is the August the 9th bottom in the stock market. And that's also when the bond made a secondary retracement at that 78% retracement. And if you look at the left-hand side of that chart really closely, you'll see a perfectly symmetrical head and shoulders bottom. It's just absolutely perfect in time and price. And from that level, the Treasury bonds, went, they've been going up for, 35 years now. So that's a pretty long-term bull market. We haven't seen many more than that. The other thing that you want to pay attention is the last part of this chart. If you'll look at it from 2010 to where we are now, you can see that three drive pattern that is forming up here up at this 169 level also. And at the bottom, you'll notice that there is a divergence between the relative strength and prices. In other words, the market is, even though it's going up, it's going up at a slower pace than ordinarily that it does. So these are some of the things that we have. These big aspects that Norm talked about last week that are coming due starting today. So you want to be watching that very, very closely. One of the bad things that's happened, well, I can't say bad. What am I talking about? I don't know anything. I don't know the difference between bad and good. And one of the things that happened with in the interest rates going this way is the borrowing costs of the corporations has just dropped precipitously in the last few years, the last 2 years for sure, and this allows them to go in and borrow money to buy their own stock back, because these CEOs and stuff, they get paid bonuses when the stock goes up, so they borrow the stock, buy their stock back, which dilutes or takes the stock, makes less stock available, it makes the price go up, and then you have a never-ending cycle of this kind of thing. Eventually, these borrowing costs are going to go higher, and then that's going to make a bigger deal of how things work. So we'll see if in fact that is the case. But we'll do one thing at a time. I wanted to just show you the relationship also on the long-term chart of the Dow Utilities, because this is the same pattern that we had. If you'll pay a little bit, this is also from our good friend Bart, and you'll notice here the three little triangles that are there. That's the three drive pattern that we're looking at in the utilities, and this goes back also to this one actually goes back to 1942, and you'll see that this is a very, very significant thing that has happened in this market, and this is basically people that are searching for yield. And you can't blame them, because with the banks paying 0.5% or minus in most countries, they're looking for yield, and that goes back to one of the things in Bernard Baruch's famous book, his autobiography, My Own Story. He was meeting with the famous actress Fanny Brice, and she asked him the secret of investing, and he said, don't be concerned on the return on your money, be concerned on the return of your money. And that is where debt comes in, and frankly, I don't believe that these debts will ever be repaid, but we'll have to wait. Another thing that's happening in the news is they're telling us about how good things are across the globe and in China and stuff like that. So if we take a quick look, we're going to run around the globe here for just a minute to show you these charts. So this is a chart for the last year in the ETFs for the Chinese shares, which mimics what the Chinese Shanghai market is doing. And as you can see, we've been in a persistent downtrend, and today the Chinese stocks were down quite a bit, even though retail sales were up. Also, the Nikkei was down 3.5%. And remember, the Nikkei is buoyed by the government buying stock. So the government's buying stock. You got to ask the question, who's selling it to them? So you got to pay attention to that, because when somebody is a buyer, somebody's got to be a seller. So somebody is selling that stock to the Japanese government that wants to buy it all. Okay, let's go to Europe, because we've got it's Charles Ponzi from Boston. He's probably the one. All right, we're going to take a look here now at the European stocks. This is the equivalent to the New York Stock Exchange Index, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a question about the British pound. And what I've done is I've posted the long-term chart going back to 1985. This is when we had the Plaza Accord in New York. The pound was $1.05 at that point. And it appears that there's some really strong support at 135. We're trading at 141 and change right now. But, folks, 10 days from today is the Brexit vote. And I wouldn't touch that with a 10-foot pole unless I could buy a put in a call on both sides, because it could go either way, 10 handles without even, batting an eye. Not that it wouldn't come back again, but, and then it also could do nothing. So that's a lot of information. But that's going into a major report, the equivalent of a couple of Fed meetings or something like that, is when you have a big vote like that. Because you have the people in Britain are really making a decision for the politicians, which is probably a good thing. And they're voting whether they want to stay in it or not. And frankly, I was just there just a few weeks ago and spent 4 days in that wonderful city. And everybody that I talked to, and there was quite a few of them, there was nobody that wanted to stay in the EU. I mean, they don't use euros there. They still use pounds. And so I'm sure the political ramifications of it, and they're as much concerned about the immigrants that are coming in as everyone else. So that's all I know and what I hear, and I know very little. There's, when it comes to politics, I know nothing. I mean, that's the understatement of the year. You could put it on the head of a pin, and but I do follow it, but I don't know very much about it. I met a few politicians in my life. I met a few presidents, of course, and I actually met Trent Lott, the Speaker of the House, several times. Had dinner with him a couple times, but. Anyway, that's neither here nor there. We'll go on to the next one. But anyway, the pound has a lot of support right here at the 140 level, but 5 points below that, we have even major support. That goes back to the 78% retracement of that whole move. So I don't think I would get involved with this on any long-term ideas until after this Brexit came out. And most probably the market will have a massive reaction and then a reaction. So I wouldn't get too enthusiastic about doing it without too much trouble. Now, something big happened this past week, folks, and that is, we've been looking at the, crude oil. We hit a major spot in crude oil. I wanted to bring up the crude oil chart showing you its relationship to the XLE, which is the ETF, because what we hit on Friday was a perfect 61% retracement at that 5160 level. I think the high was 5162. We also made a absolute perfect 100% spot on 61% retracement of the yearly high in heating oil, and then gasoline futures. They're lagging badly because they made their three drive to a top pattern several weeks ago and have been going down ever since. So there's a pretty good chance here that we've hit a pretty significant top here in oil. We're down $3 a barrel in 2 days, which we haven't done that for quite a while. And the first major support from a Fibonacci standpoint would be at around $40 a barrel. That would be down $11 a barrel from the high. So, and believe me, there is a potential that this is nothing more than a bear market rally that we just had. We won't know until we go out a little bit more in time to see how the market, handles the selling. But anytime, should we get above $52 a barrel, then the bottom for oil has been in for quite a while. That's the main thing. If you recall last week, the big thing that I focused on in the newsletter, of course, was the symmetry that was there. That held up, even though the market appeared it was going up until the last day of the week when it turned down and reversed everything. But the easiest ones to see that we mentioned, of course, were the head and shoulders pattern in the NASDAQ. That was 90 days exactly from high to high. And notice the retracement. We stayed 6 days at the 78% retracement in the NASDAQ, and now it started down sharply on Friday, and it looks like we're going to be down a little bit today too. But again, here's the same reasoning here. If we turn here and go higher and get above that 45.50 level, which is 100 handles away from where we are right now in NASDAQ, that would be very, very bullish. Because when head and shoulders patterns fail, I believe they turn into these cup and handles that were popularized by and from Investors Business Daily fame and Daily Graph. So you got to remember, when these patterns fail, they usually go a long way the other way. But right now, it looks really interesting. To Bloomberg Friday, I'm sorry, people were talking about was how bullish the emerging market has been during these past few weeks, and I looked at the chart and I couldn't understand what the gentleman was seeing. It's really amazing. Because this market, after making the head and shoulders pattern, in the end of April, it's been in pretty much of a free fall. Now we've rallied since January, but we didn't even make a 38% retracement of that high. So that's certainly not a bullish move. And we made the exact percent move was again perfectly symmetrical. So this market is far from bullish, but evidently they were seeing something that that I was not seeing. So that's the main thing to keep in mind. I think the keys to watch this week are the bond market, because the bond market, the note market, and also the junk bond market, all of these are going to be very, very important to watch, because we're over this major cycle here in these just a second here. All interest rate futures, are certainly, if we just looked at, one of the favorite things we look at, and this is going back over the last 6 years, keeps it as simple as possible. If we looked at just the ABCD structure in the 30-year bond, you can see that from the 2008 level and 2009, when we had the banks too big to fail, you'll notice that we've made a big ABCD expansion up into this area, and it was a 1.618 expansion during 2012 to 2014. So we are at the proverbial moment of truth. We've not had many markets that have gone 35 years. Yeah, 35 years in a bull market or bear market. Well, that's not quite true, because even Japan from 89, 35, yeah, that didn't even make 30 years. The Japan stock market topped in December of 89, and it bottomed in 03. So even that was not 35 years. You really haven't seen anything that way. 877-927-6648. Stay tuned for Bill Meridian of Cycles Research.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Bill Meridian of Cycles Research of Vienna, Austria. Bill, are you there?
Yeah, hi, Larry.
How are you doing, my friend?
Oh, fine.
Did you get to meet all your friends when the oil meeting was going on over there? We were all talking about you during that time.
The meeting.
You know, just a couple weeks ago, I think it was in Vienna, where they had all the
Oh, the
OPEC
OPEC
guys.
met. Yeah, they always meet here. Yep.
Yeah. Question has come up by one of our listeners. Do you follow copper? Do you think copper is at a major bottom? That was a question that was posed to us.
I can't answer that question. I haven't looked at it. So,
Okay, fair enough. Let's go to your first chart, Bill. It's one of the NASDAQ on the daily.
yeah, well, just to set the stage, at the beginning of the year, the market gave a bear market signal, and the 1, 4, and 10-year cycles, the 1-year cycle is the annual, the 4-year is the presidential, and the 10-year is the decennial. They point down most of the year, and thus far, they signaled a weak January, a rally up to somewhere in April 15, 20, a decline and another rally up until the present period. We'll see that chart. And so it's worked out that way. And if you look at the NASDAQ, it's had a high, it had a lower high, and now it's had a second lower high, and it's turned down, and that's confirmed by the relative strength. The green line is the relative strength versus the S&P 500. Mm-hmm. And so last year it was very peculiar because most stocks declined, but the S&P was down less than 1%. And this, I concluded that, at one point, the value line, which is equally weighted, was down 26% in 2015. And I thought that this year, the big cap stocks would complete the bear market by selling off, because at one point, 50 stocks in the NASDAQ represented 75% of the volume. Now, there were 5,000 stocks in the NASDAQ, so 1% of the stocks are 75% of the volume. And so my thought was the bear market is going to be concentrated here in the NASDAQ. And I think we just started another down leg. And if you go down to the next graph,
Sure.
we see the S&P, and you can see that 1, 2, 3, 4 prior highs, and it's run it back into that resistance line, and it's coming down again. So
Bill, I remember several of our folks knew you were coming on, and they wanted to thank you because last year in July you came on and were looking for a really big move into the summer, and that certainly happened. And you just described to us as a potential major top in here. Do you see the possibility of something happening, the same thing that happened between July and August of last year?
Well, let's proceed, and I think the question will be answered.
Sure. Oh, okay, sorry.
So the next, I'm just trying to set a technical picture. And here you see the NYC advanced decline line. It rallied up to where it was at the prior April top, and now it's coming down. This is a 10-day moving average, because you've got to get this, right now my feeling is the AD line is probably going to be stronger than the market is going to appear, because most stocks, I think, have already corrected. It's just the big cap stocks have the greatest influence on the indices. And so it's very tricky. In order to monitor that, I divide the value line index, which is equally weighted, about 13 or 1,700 stocks, by the OEX, which is the 100 largest. And so most stocks, I think, will not get beaten up that much, but the biggest cap stocks will. And so now to answer the question, here's the combination of the 1, 4, and the 10-year cycle is the next graph. And you'll note that it topped around April 20th. It came straight down. Now we had this little rally up, and now we're in this top period again. That looks like June 10th, 12th, which is exactly where we are. So between here and the end of the month, I think it's going to go straight down, and I'm short until about the last week of the month. And in addition to that, if you get the bear market set up early in the year, if you get that, June has been down 12 consecutive prior times when this has happened, and I think it's 12 out of 14 or 12 out of 15 in total. So everything points down in June the way it did in January and the way it will in September. So right here, now if we go to the next graph to answer the question, you'll note I've expanded on the 1, 4, 10-year cycle, and you'll see it rallies up from late June until about the last week, maybe the middle part of August. We're going to get a pretty good rally.
Okay.
And then we're going to get clobbered. You see it coming straight down into early October.
And that's one of the strongest seasonals, is the market bottoming in October.
Yeah, and this is a combination of the 1, 4, and 10-year cycle, as I said. And 1 year ago, I said most portfolio managers could take 2015 off and just come back on September 30th and buy for the fourth quarter. and I think that would have netted you a 6% gain without all the grief and the meetings and all the things everybody goes through. And here I think the same thing. I think Q4 will be very strong. Mm-hmm. And let's see if we go down. Can we switch to the oil market?
Oh, they've been waiting for this all day, my friend.
This
okay,
is
here we're back into oil.
Well, first of all, in the year 2000, 2001, Felix Zulauf visited us in Abu Dhabi from Switzerland. And we were in my place in Abu Dhabi looking out at the Gulf, and I said, Felix, this whole bull market in stocks is going to end. The money's got to go somewhere into commodities. And he said, yeah, I agree, and we were in complete agreement. And I was with the son of the then Minister of the Interior, and I said, Mohammed, oil's got to go up to like $60, $80 a barrel. And he said, Bill, if it ever gets above 35, they'll put such pressure on us to step up production. I said, well, what if you can't, I know what your production numbers are, even though I'm not supposed to know. And you can't create that much oil. You can't pump that much oil. And of course, it took off. And 1 year ago, August, it looked like we're going to see the Elliott wave pattern. I mentioned to them oil's going to go down to $30, $40 a barrel, and my clients then said, no, there's no way. They cite all these fundamentals, and of course it did that. So I just came back from 12 days in Abu Dhabi, and the oil company's laying off 2,500 people. A number of people have already been laid off. Everywhere I went, they retail. They know me, Mr. Bill, Mr. William. How are you doing? How's business? And they said bad. With the low, they always get the oil market wrong. They're the greatest contrary indicator in the world. So this tells me oil is probably going to keep going. And there were 90% off sales. I went into Pierre Cardin. I got one double-breasted blue silk suit, 2 jackets, and 2 shirts for $500. So that's they're always late, and they always get it wrong. And of course, when it got to one over $100 a barrel, I was advising people. I said, whatever you do, don't you guys get into debt. Well, they did, because they had to bail out Dubai. Abu Dhabi bailed out Dubai, and they borrowed money to do that. And I was just with the guy, my old friend Ali Majid Mansouri. He's now minister of the whole bloody government. And 1 week ago, we had coffee. He said, you were certainly right. I said, okay. If I was right, why am I freezing up in Vienna during the winter while all you guys are nice and warm? Why don't you guys bring me back down here? So anyway, oil, there is the first graph. That is the expected return. In other words, it's the probability that the market will rise multiplied by the percentage it's risen. Do you have a break?
Bill, so we're going to pay a few bills. Stay with us, and we'll be right back, okay? Yeah. Bill Meridian, Cycles Research.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back for Meridian of Cycles Research, and we're talking about the oil market and rates of return expected. You want to continue on from there, Bill?
Yeah, sure. This graph, it shows us the expected return. The probability the month will be up multiplied by the magnitude of the move. And so you can see here that March is the strongest month, August the second strongest. And you can see this period, June through August, it's sort of a bottoming process. And if you, and by the way, one of the things I found out, if oil does not rise in the month of August, it's a pretty clear short, because there's only been one instance. If oil does not close August on the upside, it's only bottomed before December, January one time. It's usually a move down with a high probability to December, January. And it's happened the previous 2 Augusts. I don't think it's going to happen this August, though. So below that, you see the oil. This is the daily cycle where the software extracts out all the current operative cycles, and you can see that it bottoms on the 14th, which is tomorrow, and it runs up into July 8th. And now to get the long-term picture, and then I'll come to a conclusion. Well, you see 1, 2, 3, 4, the 5-wave Elliott wave movement, and when it hit 5, this is one Elliott wave I got right. A, B, that long sideways move was a B, and then we got to the end of the C wave. That is August 2014, where oil closed August lower than it began it, and that is when I did the analysis. I just gave you the results, and I concluded it's got to be the beginning of a C wave. And so there you see the C wave down, and you see the retracement level. So I actually think we could hit the 50% retracement level here at 66 or so. So that's my target. And let me sum everything up. And I say below, at present, the short-term cycle now points up after the 14th, which is tomorrow. The daily histogram, which I don't show you, shows that the 20th is the average low for any month of June. The period of July through September has seasonally been strong for oil. I just showed you that. So this down movement was likely only a correction in an uptrend, and it wasn't even down very much. It was flat. And here's a dynamic indicator. When oil has risen 5% or more from March 8th to June 8th, oil has been higher by the end of the month in 12 of 13 cases. So conclusion is between the 14th and the 20th, oil will likely put in a trading low. And there I have my little blurb about Abu Dhabi always being late.
Well, this is really great cycle information, and it fits in with, some of the work that we're looking at also. So that's good. I've got a question for one of our listeners about the gold market. We have a lot of folks here that trade gold. What's your feeling on gold? Well, very short term. I think it was up today, wasn't it? 9 or 10? It's up about $10 right now. I think a little less right now.
We have not only a short term cycle downturn, but also, let me just get this on my screen so I can remember. Not only do we have a short-term cycle downturn, it's also sort of a flat spot in the seasonal cycle in the month of June. And so I actually think that gold could pull back a bit and retrace part of its rally. I'm trying to get it. Okay.
We're trading around 1287.
Yeah, well,
right
the cycle
now,
peaks right now. And June has traditionally been a weak month for gold. The metal is likely to bottom near the 24th. And when gold has risen from March 7 to June 7, the price has been down 2 weeks later in 14 of 21 cases. So 2 weeks later, we'll put it out again around the 21st. So I'm looking for a correction back to 1238, 1248. But after that, of course, after the 21st, 24th, you're then moving into what is seasonally a good stretch for gold up through September, which is the strongest month for gold. So very short term, I would not be a buyer right here. I would look to the period sort of 20 to 25 to get into it.
Mm-hmm. Well, certainly on a long-term chart, we did hold that 1,030 level. Bill, we have a question from one of our listeners about hyperinflation. I know you're probably the expert, at historical stuff. What are the possibility that we could go into a Germany-type hyperinflation like they had in the 30s over there? Would that be a possibility?
Well, anything is possible. I don't think it's probable. And a number of people have made these predictions, and they're based upon the notion of if you keep pouring liquidity into the system, everybody will take it, and it'll run down to the supermarket and buy something and push all the prices up. And we have several examples of that not happening. Instead of that, the liquidity has gone into this, by the way, what I'm talking about are known as Cantillon effects. Richard Cantillon was the first to discover this, much to the dismay of his king, who was after him, that when they inflate the currency, the liquidity's got to go somewhere. And those people who are first in line, usually the king's friends, benefit the most. And so if it does not, why didn't they see an increase in the CPI in the 20s? Because most of the money went into common stocks, and common stocks are not part of the CPI. And in the 70s, it went into commodities, and some of those are in the CPI, so we had a big move up in the CPI. And as I've said to people that I've lectured to, I said, where's all the money going? I said, it's gone into artwork, because that bull market, I think, is ending, but a tremendous amount into the bond market and private equity. And everybody that I know who left the industry I'm in went into private equity. And when everybody goes in, everybody tries to get out at the same time. I think in 2017, we've already seen cracks in the art market, but I think private equity, I think bonds will not do well in 2017. And so it depends where the money goes. But no, I don't see a hyperinflation right now. It's not to say we can't have one in the future, but it depends where the money goes. If the head of the Bank of Japan said after the 1989-90 top, he said, we were watching the CPI in Japan, and it wasn't going up. So we just kept adding liquidity and adding liquidity. So the head of the Bank of Japan didn't even understand us. And he said, because the CPI didn't go up, we presume there's no inflation. Well, the Austrian definition of inflation is simply an increase in the money supply over and above the demand for money, which artificially depresses interest rates, and it gives us guys all plenty of money to flip houses, buy art. It depends what people are going to do. Mm-hmm. And if you want to know what people are going to do, there's a rule of alternation that was, I believe, developed by Charlie Kirkpatrick. And that the asset class that does the best in one inflation will not be the asset class that does the best in the next inflation. So what got beaten up the most in the last deflation was stocks and real estate. So in 2017, I think we're going to have a crisis, but I don't think stocks and real estate will suffer that much. I think it'll be private equity, bonds, and art.
Mm-hmm. Bill, how will the folks reach you? It's at www.cyclesresearch.com.
Well, it's just bill@cyclesresearch.com.
Oh, that's simple enough.
Yeah.
And if we have you on again in a month or so, would that be okay?
You can have me on anytime. I've got something to say.
Okay, and
almost
by
every
the way,
day.
if you see something that really looks important to you and to our listeners, just drop me a Skype message or something,
why don't we
and
make
we'll have
it
you on.
in a couple of weeks, because you asked me about the election, and I just have to say I've never seen a bunch of people whose horoscopes look so afflicted. I mean, usually there's one clear winner, but in this case, it looks like it's going to be the least beaten up person who wins.
Oh my goodness! Stay with us. I want to hear more about that. Can you stay with us till after this break?
Sure.
Okay.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research, and we were getting ready to talk about the presidential election, and you were telling us it was going to be the cleanest dirty knife or something like that?
Well, something like that. It's just amazing because usually, one person, their horoscope looks superbly aspected and the other one not. But not this time. And I would watch August and September very closely. And I started out by, I wrote an opinion and I said that, we've got an unusual election. You've got a Republican candidate whose own party might try to replace him at the convention. And you've got a Democratic candidate who might be under indictment, but I doubt that'll ever happen. And this... First of all, Trump's chart has been afflicted all along, and there's no end to that. So But the other charts look as bad, if even worse. So in August, his chart gets hit, and it looks to me like there could be some sort of an information leak or some sort of a blow-up where he may make one of his statements that really is damaging. But then when you get into September, there were 2 more eclipses, and they clobber Hillary's chart, but they also clobber the chart for the Republican Party. So I'm saying to myself, does this mean that the guy who they're supporting it's not favorable for his candidacy? Or does this mean there's just tremendous dissension within the Republican ranks? And I think it's probably the latter. And the lunar eclipse that occurs, the solar eclipse afflicts Hillary's chart, but the lunar eclipse is exactly opposite to the degree and to the minute of President Bill Clinton's chart. And I'm saying, well, at an advanced age, I always say eclipses conjunct or opposite your sun are a threat to your health. So I'm thinking, could his health possibly fail, or could there be a health crisis right in the middle of her candidacy, or is it another crisis? I mean, another scandal. So, and the really odd thing is we have only one person, an astrologer who worked for Bernie Sanders' campaign up in his home state, who said that he told me he was born in such and such a time. Well, if that's true, this eclipse, and the eclipse itself connects to Saturn, Neptune, Uranus, and Mars, which is not a happy fizzies party. And that clobbers Bernie's chart if he's born at that time. So I've come to the conclusion that Trump has the least afflicted chart.
Bill, thanks for joining us, my friend. We'll have you on again soon. Certainly love it. Take it easy, my friend. Bye-bye. That's it, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.